I'm doing great. How was your day? Tried to catch reversal on
Uh,
MSFT
so
today?
I did actually. I got stopped out before the big move, but look at it's still going up like
Yeah.
AMD. It's this crazy. I
I
should stop trying to reverse it, and I should just go with the long. But
I tried it
yeah,
once as well. You see here, I'm sharing my screen, so I tried to catch a reversal on it as well, and it failed. Then I told myself, just don't try to catch a reversal on those stocks which are breaking all-time high, especially when the daily chart is that good.
yeah.
Yeah, so I tried it once. It got me sold
Uh,
out, and I just decided to stop forcing it.
right. Yeah. Well, I see. I went a little later.
Mm-hmm.
Mine was at 10:45 when I went short. You know, it's very typical mountain pass
Mm-hmm.
type pattern I was seeing. Second top, I saw it start to drop, and I got one short down at the bottom of that around 10:50, and then it
Mm-hmm.
came right back up and stopped me out.
Oh.
So anyway, but that's all good. All good. Well, look, as always, look forward to the show. We got Barge guy who's first time in the classroom, so that's good. Trader Raj is in the classroom first time in a while, so it's good. So I'll leave you to do the trade review.
Thank you,
Thanks, and
Peter.
have a good one.
Have a good day. And hey everyone as well, and welcome to our new members here. And guys, by the way, if you are new and you want to share your trades with us, don't be shy. Take a screenshot of at least two trades, the 1 minute chart, oh sorry, not two trades, two charts, the 1 minute chart and the 5 minute chart. It's preferable to have at least 10, 20, 30 minutes before your entry, like this. You don't need to make a screenshot right after your entry, so that we can analyze what happened before and what could have been done better. If you don't feel comfortable trading your shares or sharing your trades, then you can just watch this trade review. And again, it doesn't have to be a winner. um, Loser, winner, both are good, right? We learn from the winners because we know what we should do, and we learn from the losers because we know what we shouldn't do. Sometimes the losers are actually perfect. I mean, it's just a good trade which didn't work out, right? And one thing I want to talk about, guys, um, sometimes we have blown up accounts, right? And we see some members mentioning in the chat room that they have blown an account, and I don't want you guys to feel bad about it. Those who have been there, it happens to everyone, right? uh, Not to everyone, but it happens. But you need to avoid it. And how do you avoid it, guys? You avoid this by having max loss per trade and by having max loss for the day. I remember the way I started trading live, and I'm going to talk about this quickly. I had only one account, and you know that in Russia, where I live, salaries are so low. Um, on average, not on average, I mean almost maximum, a doctor can get around $1,000 per month. A doctor, and I'm not a doctor yet. I'm a student, right? So I had an account. I sold my car for it. My parents helped me a bit with my money to fund my account to 25k. And imagine if I blow up this. I will not have a second chance to trade. I was so conservative about it, and I didn't want to blow it up. When we are starting day trading, the aim should not be to make money. I know we start risking $50 per trade or $100 per trade because it is so tempting to make $100 to $200 per trade, and then eventually $1,000 maybe after 5 trades, or $500. Those numbers are amazing if you can get it per day, right? I mean, especially for me here in Russia. But you should not think about it this way. Don't think about how much you can make. Think about how much you can lose. Risking $100 per trade or $50 per trade, after 5 or 6 trades on one day, you will be down $600, or you will be down $300, and that's only on one day, right? If you get so emotional about it, and these $600 are your monthly salary, or it's the money you're getting working night shifts for a couple of weeks, you will feel so bad about it, and you will want to make it back, and you will trade with bigger share size, or you will just start revenge trading and trading till the market close. Eventually you'll be down, I don't know, $6,000, if not more, right? How did I start day trading? I started trading risking $5 to $7 per trade, and I gave myself 3 attempts per day. That's after I lifted the PDT rule. So my risk per day was $15 to $21. And that wasn't it all. If I risk $20 per day, it means $100 per week, and it means $200 per month, which is still too much for a medical student here in Russia. I told myself that I cannot lose more than $100 per month. So if I'm losing, sorry, it's around 400 actually per month. So if I'm losing 5 days in a row and I'm down $100, the remaining 3 weeks I'm getting back to simulator, and I'm trading in simulator till I find consistency and till I get everything I was doing wrong right. If I do that, I come back on the next month and I start trading live with the same rules. If I'm down $100, so basically 5 days in a row, go back to simulator. And you could see that in worst case scenario, in 5 months, I'll be down only $500. And that's totally tolerable because I was switching between simulator and live, right? Just then I was in simulator for around 8 months. Then I was trading under the PDT rule for 6 months. And then I went live. But anyway, you need to preserve your money, guys. You can't just risk it all to make money. You will not be making money the moment you go live or the first month after going live. I mean, you could, but most of us here, me including me, first month, even after 8 months of simulator, it's almost impossible to start making money. You need to be so careful about it. You need to be preservative about your accounts, and you need to survive as long as possible to get to consistency. If you survive the blow ups, if you hold your losers so small that even after 1 year of trading live you'll be down only $1,200, it's not too much, right? You can survive that and you can continue trading live the second year and the third year, and the more you do it, the better you become. And I bet 100% all of you here, even those who are here only for 30 days, have learned something new, and you feel that there is improvement in trading. Maybe not too much, right? Maybe not too much to be consistent, but you still learned something new and you still are doing better. And as long as you are doing better in 30 days, imagine how much you're going to how you are going to do in 1 year, in 2 years. You'll be doing better and better and better, and you will be making less mistakes. And yes, Marcus, you will be making more mistakes, and that's good. Make as much mistakes as possible, or as many mistakes as possible, during your learning curve, because you will be learning from those, right? The more mistakes you do, the better it is, because you will be figuring out those mistakes and you will be working on them. Yes, I had the target, and my target was similar to my loss. If I'm losing 3 trades, which is $21, my target was also $21. I rarely was making it, but eventually it became better. If you are using IB, it's not one minimum of $1 commission. Use the tiered commission, not the fixed per ticket. This way you'll be having $1 commission maybe after 3 or 4 tickets. If you are having like 5-6 day trades around 20 tickets, it will be $5 commission. T-chart, you will be doing better. You will just be working on those reversals more and more till you figure out all the issues. I've been trading this setup since February. My win rate became better since, I don't know, April or May, somewhere around there. But as long as you're focusing on one setup, that will be good. Now, Justin and Lou, I'm not sure if you sent your mistakes. Yeah, you actually sent it by mistake here in the main chat. Make sure to send the trades in the off-topic chat. We'll start with the trade review right now. It will be one trade for everyone, for now at least. And if you have time, we'll cover the rest. And then I'll go through my trades for today, the winners and the losers. So the first trade is for Lenny. Let's see what you did, Lenny. Traded SRNE. You traded it to the short side 3 times, right? Now, the first shorts right here, I would have avoided it a little bit, and if I wouldn't avoid it, I would need to have a technical stop loss. Remember, guys, market is not going to one direction, right? It's not going straight down and it's not going straight up. For SRNE, I know why you took it to the short side, or why you were tempted to take it to the short side. 3 consecutive candles to the long side, bouncing off a daily level and starting to go down. Maybe you missed the good entry. I personally wouldn't take it right here, but still, this is the reversal candle. It's a hanging man. It's a new low below daily level. This is a good entry, but I would avoid it because I don't take it after buying pressure weeks, those reversals. Anyway, you miss this. It's going up, down. It's giving you small consolidation. You are happy about it because you can re-enter into this trade, or you can take a position into this trade for a continuation to the downside. The problem is, you know how parabolic reversals work, right? They could be V reversals and work all the way down. They could drop down, then go sideways consolidation and drop down. And they could make a second top lower than the first one, or maybe mountain pass, Peter's setup. I think it's actually a good addition to the parabolic reversals when you combine it with the mountain pass. And then take it to the short side. So if you take it to the short right there, you will survive all those type of pullbacks or plays right there. If you take it to the short side here, that's an issue. Where would you put your stop loss? The technical stop loss is up there, right? It could go all the way up there, closer, and then drop back down. You can't have a new 1 minute high. I could do it in only one exception, and it's so rare that I do it, but I could do that only if I see that I'm having a new 1 minute high, and then that new 1 minute high is starting to drop back down. At least I'll have some level which was rejected and which it bounced from. In this case, it's this wick right here, and you re-entered, and that was smart. So the first trade I would avoid, because still no new 1 minute high and no clear level it actually bounced from, right? Here it did wick up a little bit, and then it continued the downtrend where you re-entered. So this was a decent short right there. No, this is actually good because it was still far from the 9 moving average on the 5 minute chart, and that was your target. You took a partial on it, then you took on the 20, and then you re-entered. A re-entry here or an add here is something I would have avoided 100%. And guys, anyone can tell me why? 2 reasons actually, not 1. And 2 are good, 2 good reasons. This add right here, add right here, I would have avoided it. So why would you avoid it if you would avoid it, guys? Moving average, 1 good reason. So let's pay attention to a consolidation. That's also good. There are some stronger reasons. Failed reverse ABCD pattern. By that time, it still didn't fail. It still looked like a reverse ABCD pattern, right? A, B, C, D. But I wouldn't take it for a reverse ABCD pattern yet. It could be something else. Volume, good reason again. Doesn't pull back to significant level. Could be. It's in a trading range as well. Good thing. And one main thing. Yeah, that's one of the best reasons I love. Yes, Ken, that's it. 1, 2, 3. We don't take it on the 3rd candle, right? And another reason. What's the main trend here, guys? Is it to the upside or it's to the downside? It's to the upside, right? You see that SRNE, it's above view up, above the moving averages. It is uptrending, and when the stock is uptrending, it usually makes a pullback. Now, it's not necessary that it's going to continue to the upside, but we need to keep that in mind, right? Especially if you are going against the trend. And if we are going against the trend, we want to go against the trend on the peaks as close as possible to the resistance. We don't want to go against the trend as close as possible to the support, right? And the support here is the 20 moving average. You see it held it here, it held it here, it held it here, it held it here, and it's going into it one more time right there. And remember, moving average, it's an average, right? It's not an exact price. It could weak a little bit below it. It could bounce a little bit above it. It could touch and bounce exactly from it. It's an average, right? Now look at this. First of all, we better avoid taking trades on the 3rd consecutive candle. And we said that. Why do we avoid taking trades on the 3rd consecutive candles? Because a lot of times after a 3rd consecutive candle, a pullback is happening. This is something to avoid. and this was the 1, 2, third consecutive candle. It was within the second candle, which is not bad, but still it was the third consecutive candle. The second thing, it's going right into a support area. The third thing, it could be forming an ABCD pattern. And remember, what type of pullback this? This is a parabolic pullback, right? The third type of ABCD pattern. Stock is going up, it's dropping down, forming a parabolic pullback. In this case, we avoid taking the first leg up. We avoid taking the ABCD pattern on the first high. Why is that? Because we are afraid it could also be making a reverse ABCD pattern. And the key right here is to see where it's going to go. If it's dropping down and it's breaking this level right here, then most probably it was actually forming a reverse ABCD pattern, which I will still avoid because of the bunch of support areas down there. If it's not failing and it's breaking this area right here, most probably it was actually forming an ABCD pattern with a W shape right there. You see this? So this place right here, it wasn't a good place to enter. Not to the short side and not to the long side. It was a place where we should have just simply held our hands off and waited to see what the price action is going to tell us. This entry was amazing. I love it actually, especially after the week. This, I bet it wasn't a new entry, it was an ad. You exited somewhere around at break even because of your average, but yeah, something to avoid maybe. Exactly, we need to take the A plus setups. You don't want to lose 1 R or 2 Rs on low probability setups and then catch a big or perfect setup, which also fails because that could happen, and then take another perfect setup which will give you 3 Rs and you will end up on being at break even, right? If you avoid those low probability setup and you take one perfect setup which fails and then another perfect setup which works out, you will be up 3 Rs or 2 Rs at least. I've been there, no Emmys. So Bitang, what did you do? Traded NIO, and let's go through the bigger time frames since you are watching a lot of time frames and I love that. Let's see what those time frames are offering us. Daily chart, NIO is gapping up. I see that it's making higher lows. It's so close to resistance areas right there, and it's making a new daily chart. I love it for long. Based on the daily chart, it's close to a breakout area. It might find some resistance closer to this pivot point right here, and that's I think where you caught it to the short side. It could find some resistance closer to that pivot point right there, and that's already like too much, right? So that's what we see on the daily chart. If you're getting it closer here at a new daily high, might be good all the way up to the next pivot point. If it's getting there, it might be good for a short if it's giving you the setup. That's what we see on the daily chart. NIO 15-minute chart. What do we have? We see it for we see it's uptrending, right? Pulling back, W shape, buying pressure wicks, new 15-minute high. At this moment, I like it for a long. This was already a huge move. Within the 15-minute candle after a pullback, I would like it to the long side. If it's giving you any reversal pattern here on the top, I would love it for a small pullback to view up or above. This is what we see on the 15-minute chart. On the 5-minute chart, what do we see? We see a stock on a third consecutive candle, right? Definitely we are not taking it to the long side here because this is so extended. We need to wait for pullbacks before we're taking stuff to the long side. So definitely right here, not taking it to the long side, but if it's giving me a good setup to the short side, why not, right? A parabolic reversal. 2-minute chart. What do we see right there? Stock going up. It's struggling, right? Some might say maybe it is forming an ABCD pattern here. Maybe this right here. One more candle. Come on. Anyway, let's look. Oh my god, I'm so bad. Anyway, some might think that this is forming an ABCD pattern and a new high right there might be a long, right? But no, we saw the 5-minute chart, and the 5-minute chart is telling us don't take this thing to the long side. We could actually assume that these things right here are reversal candles. Let's see the 1-minute chart. You see this? Isn't this giving you a good feeling that it might actually go to the long side? Let me zoom it in, get back, zoom it in. If you just delete that here, isn't this look like it wants to go higher? Small higher low candles, buying pressure weak, buying pressure weak, buying pressure weak, and maybe if it breaks this area it could go higher. This is what it looks like, right, on the 1 minute chart. But this is why we don't trade the 1 minute charts. We look at the bigger time frames. We look at the 5 minute charts, the 15 minute charts. We identify a setup there, and then we base our entries on the 1 minute chart. We don't look at the 1 minute chart and base our entries on the 1 minute chart when the 5 minute chart is already so far. And I like what you did there. I see that you were watching it here, but you didn't take it to the long side. And engulfing is happening right there. It's getting back down to the support area, making a new 1 minute low where you're taking it to the short side, and then you are partialing all the way down. This was a really smart play, because we know that when the stock is so extended, it eventually drops down right there. Joy, hey man, can we use parabolic reversals on daily time frame? If yes, what are the conditions we'll look for it? So Jay is asking here, what if the stock is so extended from the 9 moving average in the daily chart? Could we take a parabolic reversal based on the daily chart? And that's a smart question. Guys, how would you trade this? If you see a stock uptrending on the daily chart and it's so far from the 9 on the daily chart, would this tell you anything? Let's say this is the daily chart, this is the 9 on the daily, the stock is uptrending on the daily, it's somewhere right there. What are your thoughts? This is the today's candle, it's opening here. What are your thoughts when you're looking at this? Ivan will be short biased. Anyone else? What are your thoughts on this thing? You see stock in play, it's going up so much. Yesterday it closed as a doji on the daily chart, and today it's opening within the range of this candle. It's going down at some point, so I would wait for a pullback. So if you are trading this for swing trade, definitely not taking it to the long side there. If you want swing trade to the short side, it will not be a bad idea, because on the daily chart, stocks, they're trading similar to intradays. When they're getting extended, they get back to moving averages. If I want to look at it for an intraday play, I'll be way more short biased on this thing, and I'll be short biased for a big move on it. We're having a previous day close up there. I see it's going to the previous day close, and if I see that it's struggling at the previous day close and starts giving me intraday reversal candles, I would love to take it to the short side for a big move. And the big move intraday will be so big, even if the daily candle is looking like that, right? Even if the daily candle closes like this intraday move could be enough good right there. So yeah, you could, you can't expect it in one day to go all the way to the 9 and the 5 on the daily, but you could play it to the short side based on what you see on these daily charts right there. Now let's see what Ivan did. Traded WKHS for a parabolic reversal, I see. This was yesterday, I think, because I'm not sure if I traded this thing yesterday. Don't remember. Anyway, no, I actually did trade this yesterday. Yeah, I have traded this thing yesterday. I shared it on Twitter account. Anyway, price was meeting resistance at pre-market high or 2 days ago high daily level. So you see that there is a daily level here. It's marked right there, and the price action went up parabolically on what? A third consecutive candle. This is a really good sign, right? We don't love to take stocks on a third consecutive candle to the long side. Pre-entered because it looked like the 2-minute candle was going to close as a hammer, but ended up forming a bullish wick and closing as a doji. So you took it to the short side here, and eventually it got bought up a little bit, closing as a doji. Still not bad setup right there. I'm not sure how the 1 minute chart looked like right there, but it's fine. So it met the resistance again. It didn't break the resistance, got pushed back down. We already had a pre-entry right there, and then it started dropping down. First partial at 1730. I love how much you held there. You see, guys, this is the stop loss. This is the first partial reward, and this is the second. So this is the reward, this is the stop loss. I love the risk management there. The first partial was at 2 hours and covered the rest at 3 hours, since the 4 hour was below VWAP, right? Now something to pay attention here or to consider for the future. those parabolic pullbacks, a lot of times they're going to the 9 moving average in the 5-minute chart. Sometimes they could go to view up, and sometimes they could go even lower than that. And if you see that it's clearly bleeding down, there is no reason to partial. If I'm following my rules, and guys, if you are following your rules and you are still holding, let's say you left 10% of your position to run or 5% of your position to run, what will be your last exit? So looking at this here and looking at this here, what's your last exit for the 10%? And there should be a good reason for that. Mick will hold it to break even. T will hold it to view up. Marcus will hold it for a new 2-minute high, which is here. Duncan, if you didn't take your partial here, the last partial, and you left 10% of your position to run, where would you exit? Looking at this price action here, what time would you exit? On this candle, maybe on this candle, and what would be your reason? Maybe at break even, maybe at a new 2-minute high. I'll let you know where I would exit if I'm following my rules there. The next moving average, under view up, above the 9 at 50% pullback, which is somewhere right there. And I like that. There could be a lot of possible places to exit, and I'll let you know now. If I was in this trade, remember the stock, the general trend on this stock is where it's to the upside. This is a parabolic pullback, a pullback where the stock forces itself into the 9 moving average in the 5-minute chart or below it. And this is 60% pullback, right? Which is really good for ABCD pattern. So it could be forming an ABCD pattern, right? But we're not sure yet. Is it forming an ABCD pattern to the upside, or maybe it started forming a reverse ABCD pattern to the downside, right? So now, after this parabolic pullback, this is the first new high. Would you take this thing to the long side here? I mean, some might, and if you do that and take it to the long side here, it's still fine because this is an ABCD pattern on a bullish trend after a reversal candle, and you saw some buying pressure weeks before that. But I personally wouldn't take it on the first high, which is right here, because this is a parabolic pullback. What do I usually wait for? I usually wait for at least a W shape, and I see it here. So my last partial, if I'm following my rules, would be exactly here. Once I see it's making a new high. Reasonable partials or reasonable exits for the last partial is this. Yeah, this is good. So it's dropping down. You see buying pressure, buying pressure, buying pressure. Fake breakdown, making a new 2-minute high. Still good exit for the last partial. New 5-minute high. Also good exit for the last partial. And the new high after the indecision candle is also a good exit for the last partial. Some of us will love seeing the W shapes on the 5-minute chart, and we know that it could also form a double top with the second top lower than the first one, right? Which it tried somewhere right there. So you could hold it all the way up there if it's small position, just to see if you are going to survive that. And if it's failing that, you could exit a break even, similar to what Mick did right there. Different styles, and all of them are correct, but we need to always leave the last small portion to run and exit at a good reason, or when we have a good reason or something forming against us. Not following these rules all the time, I'm being honest with you, but it's something we need to work on to get to the next level of trading. Perfect. So let's see what T-chart did here. T-chart traded CGC, and I see you tried to get it for a parabolic reversal as well. Really good entry and a good stop out. Wouldn't have re-entered here, and I'll explain right now. And a good re-entry one more time. So look at this. 1, 2, 3, 4. 4 consecutive candles below a daily level. Double reversal candles. Climactic volume. This is an A+ setup. This is something 100% I'm taking. I'm not letting these type of stocks going against me or going without me. Taking it to the short side, putting your stop loss at the middle of the weeks, which is smart, and you are getting stopped out. This is a good trade, which just didn't work out and it got you stopped out, because this happens to the best of us. This happens even to A+ setups. This I would have avoided. I wouldn't have re-entered right here because it formed an engulfing, and if I take it to the short side here, I would put my stop loss above the high of the body candle. I actually see why you took it one more time. It was still forming a shooting star on the 2-minute chart, and it's making a new 2-minute low, so it's good. It's not the worst entry. It's still decent one, but in this case, stop loss would be above the body. You don't want to put your stop loss within the candle, right? You use your stop loss here, the high of the 2-minute candle, I guess. But you don't want to have your stop loss within the 1-minute candle. Why is that? Because price action is not going like this. It's not opening at the candle and continuing to go higher. It wicks down, gets pushed back up. It wicks down, doesn't make a new low, and it gets pushed back up. So you don't want to put your stop loss so tight within the 1-minute candle. It would be at least somewhere up there, and if you did that, you would not be stopped out right there. Then you are re-entering one more time after 2 reverse candles right there, but the stop loss should be somewhere at least there. You can't use the I told you that I never use the high of the week as my stop loss, but not in this occasion. I never use the high of the week when the high of the week is at the high of the day. And why don't I do that? I don't do that because if it breaks the high of the week at the high of the day, I'm getting slippage. I'll lose 1.5 R or I'll lose 2 Rs. And if the setup is working, most of the time it's not reaching the high of the day. It just goes to the middle, goes a little bit lower, and then it's working out. But when those wicks are within the candles, I'm going to use them. I'm not going to use the high of the body in this case because I'll not get slippage. My slippage is there. My slippage is not here. So this would have been a good stop loss. So you have all of your trades, they were decent. This one, yes, it's 1 R loser. The rest of them shouldn't have been losers. Implementing a good stop loss there. Can you please clarify about climactic volume? When exactly do you looking for it? So I'm looking for a climactic volume at the high of the day or closer to the high of the day. When I see that there is a huge volume, which is at least double of the average candles volume, this is what I call climactic volume, and this is a reversal indicator for me. And it was a reversal indicator or a pullback indicator, and it went all the way to 1930, which is not bad, right? Closer to the 9 on the 5, not literally touching. Sometimes it's going closer to it, sometimes it's touching it, sometimes it's going below it. And that's why we need to take partials closer to the 9 on the 5, not necessarily wait exactly for it to be touched right there. Yeah, exactly. It was a perfect setup. So let's see what we had here. I guess it was somewhere closer to 11, and you want us to review this trade here. Now look at these guys. What do we see this trade here? So what do we see here? We see SQ breaking up the high of the day, going to the previous day close, and starting to drop down. Getting one more time to the previous day close, closing as a reversal candle, and gets lower again. Getting again to the previous day close, and it's struggling. It can't just break the previous day close. Triple top right there. It was an ascending triangle, right? You see the setup here? It is a clear ascending triangle. And if you take it to the long side for a break of the high of the day, if it gives you a confirmation candle here, it will not be a bad idea. It will just fail eventually. And you see that it did fail here. And it did fail here. So what do we call this? We call this a pattern failure. So there are some traders who are trading pattern failures. And what does that mean? There is an ascending triangle forming. You're taking it to the long side. It gets you stopped out. The pattern failed here. You flip your position and it goes to the downside. Sometimes it's an ABCD pattern. This is the high of the day. It's breaking the high of the day. It's not so strong and it's getting back down. Pattern failure for an ABCD pattern. You're taking it to the short side or flipping your position and the stock drops down. Head and shoulders pattern. Clear neckline here. Breaking it down. Squeezes back up. Pattern failure, and you are taking it to the long side. So basically it's a pattern which was a fake pattern or didn't work out really well. So this is a pattern failure. If you take it to the short side here, it would have been a good entry. Here it would have been a good entry, but you missed that thing and you didn't chase it. You didn't take it anywhere there to the short side. it started forming a reverse ABCD pattern. Reverse ABCD pattern right there. You didn't rush it for an entry there because this was still not a consolidation. Doji right here. It's hugging the 9 on the 1 minute chart, forming small descending triangle, which is an entry based on the 1 minute chart on a pattern on the 5 minute chart. Stop loss here or here, both are really good, and then you are taking your partials all the way to the low of the day. This was a really good one. I like how you managed it, and I like that you were patient getting your entry. Now let's see Samir. So Samir traded Microsoft, and this is the 5 minute chart, this is the 1 minute chart. And what do we see there, guys? 1, 2, 3, 4, 5 consecutive candles. That's too much. You definitely don't want to chase a stock on a 5th consecutive candle. You either wait for a reversal right there, or you try to wait for a pullback before taking it to the long side. And you don't want to take it to the long side on the first high. Why don't you want to do that, guys? Because it could be either forming an ABCD pattern to the long side, but after a parabolic pullback, it could be forming a reverse ABCD pattern. And that's what actually happened. And this is why we want to see W shapes, just to confirm that this pattern right here, it got failed, and the previous C, or the C for the reverse ABCD pattern, got broken. Then it means that it was actually an ABCD pattern to the long side. Okay, now let's see what we had there. Reversal candle. This so clear reversal candle. Let me zoom it in. I don't know why I'm being lazy doing that. Now we saw that it's extended from the 9 and the 5. We see a reversal candle right there. We see Samir taking it to the short side here. This is the stop loss. This is your risk, guys. This is your reward for the first partial. It's almost 3 to 4 hours on the first partial. Another partial coming back up, and he added one more time. I personally wouldn't have added right here. I would be just a little bit concerned about it, but I see, this was really good. I wouldn't have added here. I might have added here or here, just to make sure that it will not do a W shape after that to get me stopped out. Anyway, you're taking it to the short side or adding to a position. Partial, 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 partial. How many did you get there? How many hours? When would you partial if you enter the reversal on the 1 minute chart? This is amazing. I love how much you held onto it. This was actually, I don't know, this is perfect. You got $3 move on 20-cent stop loss. Clean 6 hours, right? That's perfect. Good job, Samir. Where would I take a partial? Look at these guys. If I'm following my rules, this is what I would do. You see that the 5 minute chart is closing as a reversal candle. At the beginning, this would be my partial, and I would have taken a partial right there. Remember the webinar, what we said? If you see a reversal candle on the 1 minute chart, now it's dropping in the 5 minute chart, the first partial would be within the previous 5 minute candle. Why is that? Because I'm afraid it might go to the low of the 5 minute candle, hold it, and bounce back out of it. So this would have been my first partial. Now, let's see the next thing. What's my next partial? I see that this thing is closing as a doji, and now we're having a new 5 minute low. Since we're having a new 5 minute low, no reason to partial based on the 1 minute chart. Now we're partialing based on the 5 minute chart. So the next partial would be the non-moving average on the 5 minute chart. And I see you did that. That was perfect. After that, we're switching to the 15 minute chart. Let's say this is the 15 minute chart. Just let's assume that this is the 15 minute chart. This is the 15 minute chart. Now the candle gets closer to the low of the 15 minute candle. I would take a partial at the low of the 15 minute candle, just in case it bounces off the 15 minute candle low and then continues the uptrend. Let's say that this is the 15 minute candle here, and now it's making a new 15 minute low. In this case, I would hold it to the 9 moving average on the 15 minute chart, because now we made a new low on a bigger time frame. How we can partial all at the lows of the 5 minute candles? I didn't get this question, but I think if you mean this here, you remember what we said? The price action it's not trading like this, right? It's not closed, opened, and went up. It wicks down. It could go all the way closer to the low, not form a new low, and then squeeze back up. And that's what I would be afraid of here. I'm taking it to the short side. It goes all the way closer to the low. I take a partial because it could get all the way back up and close as a hammer right there, open here, and then continue the uptrend. This is why we're taking partials within the 5-minute lows, just to avoid this happening. And you see it happened here, right? It's getting closer. Not necessarily to the low, sometimes to the middle, sometimes to the low, but it gets to the candles. And this is why you need to take partials within the 5-minute candles. Once the 5-minute candle is closed and it's making a new 5-minute low, you don't need to worry about this type of price actions, right? Because now what it could do is the opposite. It's going all the way closer to the up, and then it gets squeezed back down. Getting closer to the upside and gets squeezed back down. Now a different price action is happening right here. This right here was already broken right there. So at the beginning on those parabolic reversals, my first partial is closer to the 5-minute low if it's doing it in one candle. You just, unfortunately, there are no tricks. You just watch the price action and you use your hotkeys once the price action gets closer to them. Yes, after I take my first partial, my stop loss is the break even. That's something I do 100% of the time. Sam, let's see what you did. Then we're having Justin. So Sam traded MD. And let's see MD. This is the 5-minute chart. Oh my god, did you trade this today? Now, one quick question. I mean, your entry was amazing. How much you held on to this trade all the way to 82.50 is also amazing. But how much? But there was a lot of over partials there, right? How much do you partial? 10% each time? Less? More? 15%, yeah. So your entry is amazing. The setup is amazing. 2-minute opening range breakout, right? It's also breaking above the pre-market high. And then it's just going straight up. A lot of partials, something I wouldn't have done. Remember, when there is nothing telling you to partial or to exit, then just hold on to a trade. This is the first candle. It's good to take partials if you're meeting your risk to reward at the beginning. The next consecutive candle, nothing to worry about on the second consecutive 5-minute candle, as long as it's making higher highs and higher lows on the 1-minute chart. This here, let me zoom it in, could have been a good reason to take a partial. Why is that? I see it closed as a shooting star and it formed a new 1-minute low. So those partials here, they weren't necessary, right? It was a small ABCD pattern, it formed a new high, it broke the high of the day, now it's going up. No reason to take a partial as long as it's making higher highs and higher lows. This is the first new 1-minute low. You could take kind of big partial, continuing to go higher, breaking the high of the day. It's still the second 5-minute candle. The second 5-minute candle, no reason to worry about it. You could get worried about the price action on a third candle, which is here. You could start taking over partials maybe there if there is something telling you to do that, but definitely not here yet, right? After that, you're having a red candle, a shooting star at the high of the day, and the first red candle. Yes, that is concerning, and you could take a partial somewhere here, right, on a new low, a big partial maybe. Continuing to go up, no reason to partial. This is a big candle, this is a big spike now. No reason to wait for a new 1-minute low here, right? You will be giving away $1 move. So yeah, when there is a big candle spike, I'll definitely take at a half it, at the peak of it. So these are really smart partials right there. The daily level is also a smart partial. But when there are small candles, no reason to worry about it. Even if it makes a new 1-minute low, you'll be giving away 30 cents after you made already $3, right? And 30 cents after $3 move is not so much there, right? But good job, Sam. This was amazing. I love that you didn't bail all on it. You got it all the way to 82.50. Yeah, what was your total R? I'm really interested in that. Because look, with this entry, I bet your stop loss was so tight right there. And this move right there, if you held on to it, you could get more than 20 Rs. I know it's impossible to get 20 Rs, but I think after this move with over partials, 6 hours would be decent, but we definitely can get more than it. 17 hours. Okay, this was good. I think your stop loss was even more tighter than I thought there. Okay, good job. Amazing. And imagine how much you could get out of it if you held on for a bigger move, right? Before partials. But still, I'm nothing to complain about. You got 17 hours there. I'm not talking about anything there. Good job, Sam. Look at these guys. 17 hours in one trade. He could lose 16 more trades and he will still be profitable. This is how we hold on to our winner trades. Really good job, Sam. You might actually get the trade of the day. Make sure to apply, share your trade with Mike, and I think it's Mike who's running it. Yeah. And I think you might get that trade of the day. And the trade of the week maybe, yeah, with 17R. Yeah, exactly. So share it with Mike, type some notes there, whatever you saw there, and do it there. And yeah. So now let's see. NKLA, what do you do there, Justin? 5-minute chart. Not exactly the parabolic reversal there because it's close to view up, but I see it was sort of fake breakout there, right? This is the view up. It's breaking out, but after the breakout, it's not making a strong move, right? It's starting to struggle, taking it to the short side, taking partials when it came back into the range, lower and lower and lower. That was good. Actually, I love it. I personally would have waited a little bit more. What would have been your entry, guys, in this setup if you want to take it to the short side? I mean, this was good. Maybe you saw something on the level 2 on the time and sell, which made you like the setup and take it to the short side. It was still decent because I see it did a breakout, but it wasn't strong enough for that breakout. We also had a climactic volume, and the climactic volume is what? It's an indicator reversal, right? When we have climactic volume, you don't always need to wait for a reversal candle if you have other confirmations like new low or struggling or something in the level 2. This was a good entry actually. I just paid attention to the climactic volume. Let's say you missed this short. Where could you have re-entered, guys? You are missing this trade, this entry. Where would you enter? Something we're usually talking about after breakouts. We don't want to see something, right? It's breaking out. We miss this entry. Still, it's giving us a good entry because it is something we don't want to see after breakouts. Anyone? Moving average cross. This is actually a good sign. Yeah, it's telling you that there will be a reversal. Something else along with the moving average crosses. This is good actually. We're combining everything together now. This is nice. So you have a moving average cross. You are having a breakout and break of the neckline of the double top and a shooting star. Okay, we're having a shooting star right there. Another thing. And break of this neckline right there, which is also a good sign. And also we are having a stock which is getting back. Exactly, T-Bone, amazing. Stock which is getting back into the range after a breakout. So after a breakout, this was consolidating here. It did break out, but it didn't respect the previous resistance as support for trend continuation. What's happening there? Moving average cross, as Ann told us, right? You're having a reversal candle at the high of the day. You're having a climactic volume. And you're having a stock which got back down into the range. So you could re-enter here and you could re-enter right there for a reversal. All of them were good. I love how much you held onto this trade. I wouldn't add right here because it's 1, 2, 3 consecutive candles. I think it was a hotkey mistake maybe. Or you took it to the long side for a parabolic reversal. I see that. Yeah, I wouldn't have taken it for a parabolic reversal because we have a horizontal moving average between the entry and the target. But still, I see you notice it's not perfect and you exit. But yeah, this was a really good trade right there. And thank you, T-Bone, Justin, Klaus, and Anne for the input. Yeah, Peter just shared with us how to submit the members trade of the day. You guys can definitely apply there. We're having some amazing trades here. Lou, let's see what you did. So Lou traded SPCE. You took it to the long side. I actually traded SPCE and you got stopped out there, right? So you SPCE, 1, 2, 3 consecutive candles, reversal candle at the low of the day, taking it to the long side, getting stopped out. This was a good entry, but unfortunately it got you stopped out. Let me actually share with you my trades quickly because I have traded SPCE as well there. SPC. So AMD, quickly going through it. 1, 2, 3 consecutive candles. Reversal candle, first red candle. Pre-entered it on a new low, or once right before it closed down, and it got me stopped out. Not mad about this trade. Didn't work out, and that's totally fine. Now, look at this. This is my SPC trade. Look, this is the trade you've taken, right? Stock is dropping down. 1, 2, 3, and I saw the same thing you saw. A reversal candle at the low of the day, taking it to the long side, and we both got stopped out right there. What's happening here? What is this, guys? Flat support and fake breakdown, right? Fake breakdown, squeezing back up after the breakdown, new 1 minute high, taking it to the long side. What's my stop loss? Never the low of the week, but I used those wicks here as my stop loss, right? Because this was a fake breakdown, and then it's going back up on this trade. By the way, here, guys, I got slippage. I lost around 1.5 hours. My stop loss was here. Unfortunately, it dropped down against me 2 more cents. And look at this. These 2 cents, they paid me a lot. My stop loss was around, I don't know, 5 cents. And then it dropped 2 cents more, which is 7 cents. And that's 1.5 hours. So you see, it got me stopped out there. Fake breakdown, came back up. And the second attempt actually worked out really nicely. I got around 5 or 4 hours in this trade. Made up the losers. And even more than that. This is why we hold on to our winners right there. I guess I saw it made a new sub to watching it. Yeah, remember when those stocks, especially extended stocks, if they don't give you a reversal candle and then they go start reversing, this is when we can just stop watching them and let them do whatever they want. If they break down, that's actually a good reason to continue watching them. They will not go straight down. They will pull back. And as long as they are going down, and the more they are going down, the better the pullback is going to be. So if it's breaking down, it doesn't mean that the trade has failed. It means that you need to pay attention to it because the trade wasn't ready yet and it's still there. Another stock I traded, AIG. This is it. Same thing, right? Dropping down a lot. So extended from the 9 moving average on the 5 minute chart. Taking it to the long side after double reversal candles, spinning bottom and a hammer. New 2 minute high. New 1 minute high right there. Taking it to the long side. Stop loss. Somewhere here, if I'm not wrong, or here, I don't really remember where I double clicked right now. I'm not going to make it up. And now it's going up. Now, what am I doing here, guys? I'm doing a mistake. I'm over partialing, right? No reason to take partials there. This was a good partial. No problem. I got there to 3 hours, if I'm not wrong. First partial. Then it's making higher highs and higher lows. No reason to partial. But because I had a lot of share size left, I decided to cover something, and this is me breaking the rules. This is what I'm telling you guys here not to do, but I still did it, right? It's fine. You are doing some mistakes, I'm doing some mistakes. We all just remind each other of our mistakes. This partial was really good, and I love it. I held on to the 9 moving average in the 5 minute chart, closer to it, not exactly to it, because it's an average. It could get closer to it, could touch it, it could bounce above it, and then drop down. So this was my last partial, and I exited it on it. And last trade I've taken, it was GCHC. No, what is that ticker? Let me figure it out quickly. I forgot about it. GPHC. What do we have there, guys? We're having a stock which made 1, 2, 3, 4. 1, 2, 3, 4, 5, 6 consecutive candles, and the last candle was so big, right? And we see that those candles had lower wick, lower wick, lower wick, and now we're starting to have upper wicks. Perfect. Like, you see all this move, and now we're starting to get selling pressure. We're getting selling pressure, we're getting selling pressure, spinning top right there, new low, take it to the short side, stop loss above the wicks, and then take some partials. My mistake here, this partial. This is not bad because I saw that those spikes to the upside, they were violent, they were fast, so I'm not mad about those partials. I'm mad about my last exit. I should always leave a little bit to run, and it never got to my break even. You see? This is what happens. This is why we don't enter somewhere down there. Remember what I told you guys? Those parabolic reversals, they are not always going straight down. They could make a double top lower than the first one and then work all the way down. And this is why mix stop loss, which was at break even, remember I told you I would exit, and if I held on to this, I would have exited here because of the W shape we had, or here. Mick told us that he would hold all the way to break even, right? And it never got to the break even. So in this case, if Mick leaves 10% for break even, it will eventually works out to them. And that's why I told you there are all your suggestions, new 2-minute high, the break even, the double shape, all of them were right. You just stick to something you think works more, and eventually market is trading differently, right? Sometimes it will go closer to your break even, sometimes it will just make a new 5-minute high, sometimes it will just make lower lows and lower highs, going all the way down. Now let's see the dance trade. Traded AMD, and I see you tried to catch it for a reversal right there on a new 2-minute low. No new 2-minute low there, no new 2-minute low here, but finally new 2-minute low here, taking it to the short side when it was so extended from the 9 and the 5, and it's getting used out. Totally fine, not bad, good setup actually. Mick, what did you see? Traded JMIA. What did it do? It dropped down 1, 2, 3, 4 consecutive candles, right guys? Closer to the pre-market level. I assume this is pre-market level. Double reversal candles on the 2-minute chart, taking it to the long side on a new 2-minute high. It's also a new 5-minute high, partially closer to the 9 moving average on the 5-minute chart, which is good, right? Because stocks usually bounce off that moving average and then continue the downtrend there. So this is amazing, Mick. And let's see what Dan did there. Baba, what do we have in Baba, guys? We have 1, 2, 3, 4, 5, 6, 7, 8 consecutive candles, right? Remember, it's not always 3, but we don't want to get into the long side after the third, because a lot of times stocks start pulling back after the third. Stocks start to pull back after the third. Stocks start to pull back after the third. That if it worked one time for 8 candles, it doesn't mean that it will always do that. What do we have at the high of the day? We're having a fake breakout, which is a good signal, right? We're having a reversal candle, another good signal. We're having a new 1-minute low, which is the first in like $2 move. You're taking it to the short side. Stop loss. What would be my stop loss in this case? My stop loss would be either above the new 1-minute candle or above the previous, which is safest. Never the high of the day. I love how much you held on to it. It's making a new 5-minute low. No reason to partial, right? Because it made a new 5-minute low, and because it made a new 5-minute low, you could hold it all the way to the 9 moving average on the 5-minute chart. Closer to the 9 on the 5 and add the 9 on the 5. Could leave 10% more to run to the daily level or to the next pivot point. And this is a good place to actually get most of your position out. Why is that? Because the previous resistance is acting as a support. If you see that that's happening, that's a good signal to actually bail on the trade. There were some questions I missed. Let me take a look at them. I'm having issue with adding. Does create another stop loss every time I add. Is there a way you can add without initiating a new stop loss? Yes, you can use a hotkey button to add, which is not putting an automatic stop loss. Then can I'll send the link in the off-topic chat right now. There are some hotkeys there you might want to take a look at. T-Bone, Ayman, what is your average win rate and risk to reward? My win rate last 2 weeks 75%, but it's last 2 weeks. I had a week where I had, or 2 weeks where I had 40% win rate, but I was still profitable there. And I had a 1, 2, 3, 4, 5. I had like 6 to 7 green streaks days so far. Hopefully it's not broken. I mean, we never like red days, but I know it will come, and there is nothing to be mad about when that red day comes. Assuming you're using the Cal hotkeys from the Education Center dynamic hotkey video, it will make a new stop loss, but you have cancelled the other that originally created. Yeah, you can use the, Cal's hotkeys without the automatic stop loss. It will calculate your share size, but it will not put a new stop loss. This way, this was your first day live? Amazing, Dan. You actually got a really good trade on a first day live, and I love how much you held on your first day live. Usually when we start trading live, we take early partials, but you held on amazingly to this thing. Hello, Breezy Big Boy. Ken, I also want to know whether ABCD or parabolic reversals has higher winning rate. Look, when you are starting to trade a new setup, no matter whether it's a mountain pass setup, parabolic reversal, ABCD patterns, you will not have a high win rate on rate because you're just starting to trade them. You will not be always catching the perfect setup. And you see, Peter is telling you that with the mountain pass setup, he's having 90% win rate. Do any of you have a 90% win rate here? I don't have a 90% win rate. And if I will not go and trade only the mountains pass setup because Peter has a 90% win rate on it. Peter has a 90% win rate because he's good at this setup. He's been trading it for a long time. He's been making statistics. He knows when that setup is perfect, and that's why he has a 90% win rate on it. So basically, pick any setup, even if it's a double top, even if it's a double bottom, even if it's an opening range breakout, and you will be able to have a huge percentage win rate on it. But you need to keep trading only one setup and keep analyzing your data, keep figuring out why your trades worked out and why your trades failed. Only then your win rate on those setups or on your setups will be working out. There is no perfect setup which is better than the other thing. There is a setup which you love, which suits your personality, and which you can work on till it becomes perfect for you. Was there anything in particular that made you avoid AMD after your first stop out? It never gave me a perfect setup, Ivan. So the first entry, it was perfect for me and I took it. I kept watching it and I wanted to catch a reversal on it, but it never gave me the perfect entry which I wanted for a parabolic reversal. Can you show your level 2 montage little quick? I feel like mine is missing data. I can do that, but unfortunately my account number is on it. Send me an email or I will take a screenshot on it. I'll hide my account number and I'll send it to you, okay? Trader Raj, what are your two setups that you take? ABCD patterns and parabolic reversals. So far, I've been trading only the parabolic reversals for the past 6 months. Not because the ABCD pattern is not really good. I have way better win rate on ABCD patterns. I've had like 70 to 75% win rate on ABCD patterns for 3 consecutive months. It's never been less than 70%. But the problem with ABCD patterns, it takes so much time to form and I need to watch it for hours till I see that the setup is formed out. And with parabolic reversals, I don't need to do that. It forms out so fast and the risk to reward potential is so good right there. And that's why I prefer parabolic reversal. It's not because it's better. It's because it's faster and I love fast trades. Nabil, I know you're kidding. So, okay guys, do you have any other questions there? What time do you take parabolic reversals? Any time of the day, even pre-market. If the pre-market, and let me show you actually, there is some trade in the pre-market, but I didn't take it. If I have more than 1 million shares traded in the pre-market on any stock, I might like it for a parabolic reversal. NIO here, NIO here. What do you see guys in the pre-market? In the pre-market, it had around 2 million shares traded. 1, 2, 3, 4 consecutive candles. What do we have at the high of the day? Reversal candle. What happens after the reversal candle? New low, stop loss, 2 cents, move, my math, around 16 cents, which is 8 hours. If you have a lot of volume traded in the pre-market, which makes it not look like a pre-market price action. You see this price action here? It doesn't look like a pre-market action. No gappy candles, nothing. It's a clear intraday price action. If I see that, I could trade it in the pre-market. If the pre-market price action is looking like this, gappy candles, not so clear, I don't know what do we have as well. SQ maybe. You see this? This is a bad price action, pre-market price action. I'm not taking any trades in the pre-market. If I see that, I would start taking trades after the market opens if it is giving me a good setup. My email is ayman@beerbulltraders.com. Guys on YouTube, I'll type my email as well. If you have any questions, feel free to email me. I'll be happy to help you guys. And by the way, some people here asked me to make a Twitter account, and I did finally make it. I'll be posting my trades, not all of them, some of them, every day there with some explanations. You can ask me any questions there. That's the Twitter handle. You can follow me there. And that's it. Have a good day, everyone. I'll be in the chat room.